Meet the Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
So yeah, I don't normally do this, but somebody didn't show up for the speaker slot, so we had to somehow come up with something. So as Stefan said, I started CryptoCompare with Charlie a while back, and I'm just going to talk about what we've learned, what is it like to be a startup in the crypto space, and how we're dealing with different problems. So in case you don't know who we are or what we do, basically we do live streaming prices, we connect to all the cryptocurrency exchanges, and we get trades and order book data, then we aggregate the trade data into our own price. We offer an API for it that's used by a lot of people. I'll go into more details later on. We've got a portfolio tool where you can track what you're holding in your wallets and how it's doing over time, whether it's doing well or not. We've got a forum, we've got reviews, we do ICO research, and we've got wallets and exchanges that you can pretty much compare and find out which one's the best for you. We normally don't talk about the price here, so it's going to be pretty hard for me to not mention the price since we're a price comparison website. But I managed not to do it, which is a feat in itself. So why did we start CryptoCompare? I wrote a blog about it a while back, but it's because we love the crypto space. And when we started in 2014, there was no reliable source of information that you could get crypto data from. We also wanted to help fight dishonest businesses because, as we know, there are a lot of them. We think there's a lot of potential for the space. It's going to grow. It's going to lead to we're already seeing national currencies, not from the most reputable nations, but there are nations doing cryptocurrencies. I think that trend is gonna keep growing, and you'll see at some point a pound on the blockchain, which would be really cool. We wanted to give the community a voice through reviews, so that's why we've got a pretty deep review system throughout the website. We wanted to support the space and help get it to its full potential, so help the space grow, which is why we do a lot of things for free that I'm going to cover later on. So yeah, that's what we do. And basically, what worked really well for us is giving stuff for free, which is a no-brainer generally, right? That's what works for everyone. The hard bit is actually doing a product that people want, because there are a lot of free products out there, but they might not be the most reliable. So that's why we focus on quality of data rather than quantity. So we vet exchanges before we integrate with them. I think there are around 200 cryptocurrency exchanges out there. We do 85 of them that do pretty much 95, 99% of the volume. We give our data for free to a lot of companies. So Mist, which is the official Ethereum wallet, Etherscan, Etherchain, Exodus, MyCrypto, MyEther wallet. I think both of them are using us. MetaMask and a lot of other people. Ledger's using our pricing information. We do free portfolios, so you can, like I said, register, put what cryptocurrencies you hold, and we'll calculate a lot of cool stats for you. It also worked well for us to generally keep the costs really low when we started the company. So you'll see later on that it was just Charlie and myself for a long time until we started making money. So that's if you've got a startup in the crypto space, I would say keep a tight purse and make sure you have enough money for at least 1 or 2 years. We also do a daily crypto market update email, which a lot of people love, and it's one of the main registration drivers. So every morning you get an email from us. This is what happened overnight. This is how the prices moved. This is the big news. It also worked really well for us to be paid in crypto because we've been doing this since 2014 when crypto wasn't that highly valued. So unfortunately, we don't have all our funds in crypto, right? As a company, you need to keep enough funds to keep everything running, regardless of what happens with the price. But it's worked well for us to have a mixed portfolio. And it also worked really well for us to get involved in the community. So we do things like we organize the meetups, the Ethereum meetup. We help Paul Gordon on the Bitcoin meetup. We do the Ethereum socials. we do podcasts, we sponsor podcasts, so the Crypto Show, Bitcoins and Gravy, the Tatiana Show. We help with organizing events, the World Blockchain Forum, the Crypto Investor Show that Stefan mentioned earlier, and Patrick's here, he's the one organizing it. So if you want to talk about the Crypto Investor Show at some point, you can definitely talk to Patrick. We help organize hackathons as well, so we did the Reuters hackathon, we helped the Simply Business hackathon that Matok organized. Then it also helped for us to generally stay engaged with our community to our forum, because we've got a pretty active forum. And for me personally, because for I think the first 2 years I was the forum, I was the only one talking there. Nobody really cared about us. It helped a lot being honest with our users. I have a free portfolio. Everybody can see what I'm holding. If I say don't do that, they can see I'm not doing it either. Or if I say do that, then they can see I'm following through on my advice. I don't do a lot of trading, so and we also help small businesses. So I don't know if Nick is here, Nick Johnson, he's doing Ether cards, so we gave them some free advertising. We give out free advertising to places where you can spend cryptos, or places where generally cryptocurrencies are accepted. What we struggled with, like in our 4 years history, was hiring. It's really hard to find good people in the crypto space that don't cost an arm and a leg, because you're competing against the big banks, right? Against everyone that has a lot of money behind them, and you're a small startup. You need to convince people to your passion, I guess, which is what we've succeeded so far. Accounting was a pretty big struggle for us as well, because how do you keep track of mining revenue or affiliate revenue from mining contracts, which is even weirder, or just general small microtransactions, donations in cryptos. We've also struggled with a lot of unreliable companies that said they were going to pay but disappeared. But I guess that happens in all the businesses. A lot of other small insignificant things that I'll cover in the next slide. We've had constant DDoS attacks in the last few months since the prices started going crazy. We've had scaling issues because obviously as you grow, you get more traffic and it becomes more complicated to manage by just a few people. So on the small annoying things, it's really hard to get a bank account as a crypto company. It was really hard in 2014. It was really hard in 2015. It's been really hard every year, and it is still hard. We have a bank account because we said we're a web portal. That's it. Because that's what we are. We don't do trading. So I guess it must be really hard for exchanges to actually get a bank account if banks don't talk to us at all, pretty much. It also was really hard to be taken seriously because everybody, like in 2014, after Bitcoin crashed, everybody was like, this space is dead. A lot of businesses were going out of business because they had overspent what they planned to spend, and the space just took a step back. So nobody was really looking at us or cared about what we did. Finding office space without a bank account is also really difficult because you need to find a company that accepts crypto. It's a lot easier now, but it was a big struggle in 2016 when we got our first office. And also, like I said, sorting out our accounting and taxes, you need to find accountants that are willing to explore the space with you. And pretty much we were in constant talks with HMRC about how we do space and decide that we're gonna be aggressive. They're gonna come after us, right? They're gonna come after the companies in the space. So we needed to be squeaky clean. And I think we've done a good job, but it was a big struggle. The DDoS attacks that I mentioned, it's basically DDoS and spam are what's been taking most of my time over the last 4 months since the space started to explode. We've had a lot more people coming in, but a lot more bad actors as well. And as competition grows and everyone has access to crypto, I think it's pretty easy to generally buy a DDoS attack from somewhere by paying with Bitcoin. So we've been constantly under attack, I'd say, for the last 4 months. And I've learned a lot personally on how to deal with it. Because when we started, I didn't have any rate limits, right? Who would abuse us? Nobody used us, right? And I learned the hard way that you need to set up rate limits. One of the most interesting things was Google Sheets, right? You get a Google spreadsheet, and it can hit an API, And somebody did one that was hitting our API, and it became really popular. So we started getting from 5,000 requests a day to 5 million requests an hour. And I was like, all from the same IP, because Google does all the calls through one IP. I was like, oh, I need to put rate limits in. Same thing with IP blacklisting. If there were a few people that were abusing it, and Cloudflare helped a lot. Like actually having Cloudflare in front of our service, I think saved me a few nights that I could actually sleep in, on whatever. And on the spam side, on the forum side, the hardest bit was, again, we were small, we weren't a lot, and the spammers are pretty good. Like they take on companies like Facebook, Twitter, like people that do social media as a profession, like their main thing. And then there was us, and we had to do a lot of things to at least bring it up to a level where we're not constantly under attack. So the first stage was just manual spamming. So somebody would create an account and then put a lot of links to an affiliate link or affiliate URL or any other. Some of them were actually for downloading viruses and downloading crypto lockers. And we solved that with mods and admins on our forum that would delete and keep track of everything that's happening. The second stage was they'd create a manual account, they'd activate the account, and then they'd have a service that would just post constantly the same links. So we got around that by putting rate limits and blocking IPs and usernames, so actually banning people. And the third stage, which probably happened, I think, 2 months ago, it was automated accounts and automated posting. So they'd create a Facebook account, register with the Facebook account on our service, activate, and then start posting links. So the way we tackled that was new accounts couldn't post links for a while, and there was a cooling off period when you created an account. So between creating an account and actually posting anything. On the scaling side, we grew a lot, and it helped a lot that we had a microservices-oriented infrastructure. It was easy for us to recover from data failures if there was any failure, because we actually store the raw data from the exchanges. So when we poll for trades or trades get sent to us via streaming, via sockets, we store the raw data. And then if something goes wrong with the database, we could always reprocess that data and rebuild everything. So that helped us a lot. The eat your own dog food approach helped make our API popular, because it's the API that we use internally as well. It's not just the API that we give to everyone. It's the API that builds our product. Having multiple cloud providers also helped. And now that we're working with a lot of financial companies, they kind of request some sort of resilience. We used to just be on Azure, but now we've got our own data center as well, and we're looking at other cloud providers. On the scaling side, it helped us to actually get the best tools available, not just one tool that fits all, because there was no way we could build a product without using external existing tools like Socket.io for streaming data, Redis, Postgres, all the tools that you can think of on the tech side. And it also helped to let people use different technologies, right? We didn't say everyone has to do C#. We used C# for what it was good. We used Node.js for what it was good. We're doing some Python now as well. So I'd say it helped a lot with scaling. Having stateless APIs and endpoints helped too. Going cloud first, I can't imagine what it used to be like for a small company to get a lot of traffic overnight before cloud, because you'd have to scramble and actually buy the servers. And yeah, don't be afraid to use existing tools. I've got a blog post about it. All of this is going to be available afterwards, so you can find the links there. On the caching side, so our API grew from 1,000 calls per hour to 180 million calls per hour in 2017, which is crazy numbers, right? I was happy with 1,000. When we hit 1,000, I was like, yes, we've made it. It's the same with the users, right? When we reached the first 1,000 users, and I stopped paying for ads because nobody looked at us. I was like, yes, 1,000 users, that's amazing. And now we're at 800,000 and still growing and hitting different milestones. It was a really cool ride. But yeah, how do you scale for that, right? Caching like I said, helped a lot. We only had 7 minutes of total downtime on the API in 2017, which is pretty cool. That's 99.992. Yeah, in December, when Bitcoin and Ethereum were close to their peak and everybody was talking about the price, we were getting 50,000 calls a second on over 20 servers. And again, the microservices infrastructure helped a lot because you could just spin another server up. On the Redis and Postgres side, we started with just one master, but then we soon realized we should use a master-slave approach. So we're writing data to one place and reading it from multiple places. And it's the actual caching in memory that saved us a lot. The price changes a lot, but realistically, more than 10-second cache on the price, you don't need the price that often. And if you do need it that often, we've got a streaming API with WebSockets where you get every tick. But for browsing your wallet or for looking for pricing in different portals, 10 seconds seemed more than enough. And we were able to keep all of that in memory on each server. And also doing a lot of messages in between the servers. So rather than loading every time somebody hits our API, going to a database or to an in-memory storage like Redis on another server, we kept sending messages in between the servers. Hey, this changed, this changed. So they'd update their internal state. So each server had its own version of the cache that was, and has now as well, that is consistent across all the servers. So the only time we actually hit our centralized storage is when we start up the server because it doesn't have any data. And then we get incremental updates. So that helped a lot on the caching side. In terms of future plans, we want to generally build bigger and better portfolio tools. We want to let people import different trades from different places in their portfolios. Portfolio encryption is something that I've always wanted to do because at the moment it's in a database and there's nothing stopping us from looking at it besides me stopping everyone from looking at it, generally. But if we let you encrypt your portfolio, then we don't have access to it. And we've built the system in such a way that the only reason why you would come to our servers is for data once it's encrypted. So it would store it as a blob, your portfolio, and then you'd only ask us what is the price of Ether. We wouldn't know how much Ether you have. We wouldn't know where you store it. And that's how we work generally with the other providers, with the wallets that use our APIs. We're going to launch a mobile app. We've been talking about it for a while. It's really cool. We've been testing it internally for a while. We want to build more and better macro stats, like total volume over time for different exchanges. So you can see a chart of which exchange is doing better and how much traffic they're getting, and like generally compare exchanges and see how they do. We want to improve the forum. We want to do better notifications, so price alerts and forum notifications. We want to do more research tools. And then, yeah, I figured I put a slide with random interesting things about us. So we bought CryptoCompare in 2015 for 2 bitcoins, which was, I think, $500 at that point for both of them. It looks now. We have outperformed Bitcoin for our investors. So whether our first investors that invested in our company, they actually did better for investing in us than buying Bitcoin, which is a pretty big achievement. We were only 3 and worked from home for the first 2 years of our company. And now we call ourselves a multinational, even though we're not, because we have multiple people across the globe. We have 30 employees, which is amazing. And we've hired all these people in the last 2 years, pretty much. So we grew from 3 to 30 people in 2 years. Our first 4 employees all had pets. I have a cat, Charlie has a dog, Paul, our designer, has a parrot, and Antonio, our content person, has a few dogs. We've got over 1 million posts and comments on our forum, over 300,000 portfolios, and we all pretty much love what we do. I put a picture of Charlie when we started the company. So this was us, 2014, in his countryside house, working from home, just him and his dog pretty much, and myself. Yeah, and in terms of our business model, because a lot of people ask us about it, we generally do data sales, affiliate agreements.
code base. Did you open source anything?
No, not yet. But I am planning on open sourcing our new framework for creating users. And I'm definitely going to open source once we do the portfolio. There's no point in having a portfolio if you still have to trust me for encrypting it. So that part of the code is definitely going to be open sourced.
So how do you get most of your growth right now in terms of usage and users, and what do you plan for that in the future?
So how do we get most of our growth? I'd say the portfolio is doing really well. Everyone wants to open a portfolio and track. The portfolio bit is a complicated problem because you end up trading on a lot of crypto exchanges if you want to trade a lot of alts, because each exchange lists different coins. So giving people a single place where they can keep track of everything, that helped a lot with user growth. Also the forum, people wanting to get involved in the discussion, the daily newsletter, so just registering because you want to, in the morning when you wake up, want to have that piece of information. And in terms of future plans, yeah, like I said, we're going to expand on the portfolio. The app is going to be good because everybody's asking for an app to keep track of their portfolio in the app on the go. And more general stats. Start doing more comparison because we're really good now at granularity of data, but we need more big figures. That's what the press usually cares about, generally.
Sorry. In terms of recruiting, what did you find your biggest challenges were in terms of finding the right people to build your team?
Competing with banks, right? Because and financial companies, they've got a lot of money to give developers. We don't. We do share options, and it's just because of sheer passion that most of our employees joined us. So that's the hard bit, finding good people that are actually passionate about the space and don't care as much about the money. Because as soon as you put blockchain developer next to your job title, your salary just doubles or triples, or even worse, gets even higher.
Just to build on the last question, do you pay any of your salaries in crypto, any portion of the salaries?
Yes, Antonio, our fourth employee, was paid 1 Bitcoin per month for quite a while, for a while longer than we wanted to. He joined us in 2016 when Bitcoin was around 600 euros. He's from Lisbon. We said, okay, fine, 600 euros isn't that much. By the end of 2016, Bitcoin was 1,000 pounds, and we were starting to get worried. And we said, hey, we're going to cap your salary because this isn't really working out for us. He still gets his paycheck in Bitcoin, but it's capped.
Can you talk about crypto debit cards and what's the best one?
The crypto debit cards, because we list crypto cards as well. And they're not really crypto debit cards, they're more like top-up cards where you put some money on top, but since Visa and MasterCard basically said no more, most of them are struggling to actually do any sort of transactions. So I'd say the space is pretty up in the air now. Nobody really knows, because most of them were relying on Visa and MasterCard as the backend. Yeah.
So just to touch on the question about getting paid in crypto. So I'm actually interested in paying people in terms of their salary in crypto. So what are the logistics around that? Like, how did you do it in terms of legal, accounting, and stuff like that? Just if you
Charlie would be the best person because Charlie handles all the business side. I just handle the development side, and the staffing as well. Charlie handles it. I know I think we pay it as an actual salary, so we pay the money as £1,000 per month, but then we convert it and send it in crypto to the employee. So he pays taxes on the £1,000.
Congratulations on a great website, first of all, but I was wondering, in terms of, you must get a unique insight into trends in the industry from the data, not just coming to the site, but from users. Are you seeing trends from particular countries in terms of traffic? Are you seeing trends in kind of daytime use or monthly use, or with major news topics that might be interesting for the people like us who want to know more?
No, thanks for the question. One of the cool things, and one of the things that helped us actually raise money at the beginning, that's what all our investors said, was that crypto never sleeps. At some point, somewhere around the world, somebody is up and wants to trade or buy or check prices. So our traffic levels, unlike a normal website, don't fluctuate during the day and reach a peak and then go out during the night. We have pretty constant traffic levels. We've seen a huge increase. I think it was last winter when there was the change in currency in India. They banned some of the different types of cash. We saw a big increase in traffic from India, and we're like, what's happening? We saw the same thing with Korea, because they generally have, South Korea has a pretty big premium on buying crypto compared to dollars. You pay a lot more in Korean won than you pay in dollars. So we see general spikes. We've got a lot of people from Venezuela. We even have people from North Korea visiting our website. I don't know how many websites out there can say that.
I was like to ask how you're going to counteract against other companies or other countries launching their own cryptocurrencies, such as you said, Venezuela and other countries across in the world. And because cryptocurrency is so popular right now, what's your main scheme to counteract against other people taking over your space?
Sorry?
Taking over your space in the market?
Can you repeat the last bit louder?
How are you going to counteract against your competitors, let's just say?
How are we planning on staying ahead of our competition generally? You are right, there's a lot more competition in the space. Like in the last 6 months, I think a lot of websites started appearing to handle different parts that we do. We're hiring a lot of people. We grew from 3 employees to 30, so that's one way of counteracting. We've got a research team that spends most of their time coming up or looking at the space in a different way. How can we make this? We've got so much information, right? Most of the cryptocurrencies have open source repositories. You don't have the normal approach that normal stocks do. So how can we find metrics that actually work for the space, that don't really work, that can't really be ported over from the stock market? So that's one way of doing it. We want to make it a lot easier for the portfolio to import from different exchanges automatically, and yeah, we've got a lot of plans, but you are right, there is a lot more competition.
I just have 2 quick questions. First question, following on from the data that you must have around what people search and how long they spend on the website. Google gives you access to trend data, so how many people search different things on the web. I just wonder if you have something similar.
Well, we've got our own Google Analytics, right? So we can look in Google Analytics ourselves. I'd say that the trends is on the money in terms of what we see for our traffic levels as well. Like we saw a huge increase in December, and now it's still growing, but it's not growing as fast, right? Generally, price movements, if the price goes up, we see a big spike in traffic. If the price goes down, we see a big spike in traffic for one day, and then the next day, people just stop looking at their portfolios, right? That's a normal approach, I'd say.
Are you thinking about making that data public?
Yeah, we've got already page views. So if you go to our advanced charts, you can see how many page views we have on different cryptocurrencies. You can see all our forum stats. There are APIs for everything that everyone posts, APIs for how many page views we get per coin. So we talk to me afterwards. I'm pretty open to making more data public as well.
Okay, last question. No more?
Okay, I guess that's it. Thank you. Oh. Ooh, one more. 2 more. There's somebody else in the back. Okay, last 2.
Legal agreement or partnership with those exchanges, or do you need any like customer authorization?
So the way, we don't do it yet, but the way I'm planning on doing it is you get a key for most exchanges, and the key stays on your computer. And then you just send me the trades through our API saying this trade happened, this trade happened, this trade happened, and then we never have access to the key. Because that every bit of information that we have access to makes me a lot more restless and stressed. And we become a target for DDoS attacks. Like we've seen like random things, the price, somebody trying to get the price to crash. So then you do a DDoS attack on all the major websites. Everybody panics and starts selling because the exchanges don't work. The price comparison websites don't work. So it's, yeah, the less data we have, the better. So I'm planning on storing the key on the computer, on your computer, then just sending the trades. And if it's encrypted, if you have an encrypted portfolio, then you just send me an updated blob saying, this blob of data is now my portfolio, but I don't have access to any of it.
So
Okay.
my question is particularly about the market cap of crypto assets. I've seen placeholder VC and Chris Bernanke particularly doing a lot of interesting work around market cap valuations and how you might arrive at kind of realistic and honest versions of such. There seems to be, particularly at the moment, a lot of people looking to kind of manipulate that space, create artificially high market caps for obvious reasons. For you guys, coming to your valuations and the kind of ideas you have about that, are there any particular areas in the immediate future where you're looking to make progress on how we actually can get a better understanding of those kind of values?
So that's where we were trying to come up with different stats. Because at the moment, I think that most of the focus is on the market cap of the thing. But it doesn't, I don't know, I have a problem with the way CoinMarketCap does it. Because they have their own supply, they call it circulating supply, which can be anything. Like there's no methodology behind it. They can change that number to anything they want. So the way we do it, we do it based on actual tokens in existence. If the tokens are available, then that's part of the market cap. If it looks big, then you probably shouldn't invest in it, right? That's a pretty good signal. I'd rather be honest with the data than try to fiddle with it. But we are working on different ways of showing stats. We're working with Chris actually a lot on showing which stats would actually lead to a better understanding of the space. Cool, thank you.